Markets are digesting mixed second quarter results this week. That certainly has been the driver. Chipotle, for one, reporting disappointing second quarter numbers after the bell last night. It is still struggling to regain its footing following the food safety concerns. Joining us right now, Rhino Trading Partners Chief Strategist Michael Block in New York. Michael, good to see you.
Great to see you.
So how would you characterize the earnings season so far?
You know, earnings season, we'll talk about Chipotle and last night, but really, expectations were really low, Maria. The bar was really low, and, coming into last night, you had something over 3/4 of the companies that reported surpassed the expectations. Those expectations were a lot lower. Take a company like Goldman Sachs. Everyone was excited that they beat analyst estimates for their second quarter. However, those numbers had been lowered substantially. If you look at where they had come from, it was really an inline number. So now the question is, what's good, what's bad? The point is the bar was low, they were exceeding it. Now, in the case of Chipotle, they weren't really exceeding it, and I think that's something that's interesting here in terms of looking at that company, but looking at the U.S. consumer as well.
Yeah, and that's an individual story. But, as always, Dagan, it's always the guidance. So what are we hearing from companies about the rest of the year? Has that been better than expected?
In some instances, and I'm curious what Michael thinks about, because, again, your winners have been in technology to a certain extent. But what about these sectors that look very expensive at this point? And I think technology would be one of them, right, Mike?
Yeah, technology, again, it comes down to, it's always a tale of two cities. Who's winning, who's losing, and what are the expectations there? Take the other night, great example of what I'm talking about. You had Intel and Qualcomm reporting. There was a lot of excitement going into Intel. People were excited about about this growth in the server business, the cloud business, if you will, and maybe they fell a little bit short of those expectations, and the stock acted accordingly. As compared to Qualcomm, where there's concerns about mobile growth, lo and behold, the bar was low, they vaulted over it, the stock traded better. Last night you had...
it sure did. It was up 8% at its best, right?
Look at that.
And that helped the NASDAQ. NASDAQ hit a record high yesterday, following a week of record highs for the other two major indices. So, like you said, it really is technology, and that's why you had that, the NASDAQ doing so well yesterday.
Yeah, well, it was that, and also, biotech's had a nice little stealthy run. It gets left for dead, and then it walks back because growth investors need to find the growth somewhere. Where are they finding it? They're not finding it in industrials. They're not finding it in utilities. They're going to find it in areas like biotech. So that's where the opportunities could be.
I still think that Theranos story, which broke last year, scared a lot of people out of biotechnology companies.
Sure, it's a big boy game. You have to really know what you're doing. You can't blindly enter to do stocks, but for the talented bottoms-up biotech experts, there's a lot of opportunity out there. Now, last night we had Chipotle, but we also had Starbucks not doing so well, and we also had Capital One, which is a bank, but it's a proxy play on the U.S. consumer, not doing as well there. What does that all mean? We've had advanced retail sales numbers looking better, some U.S. economic data looking better, but what are those companies telling us? If Starbucks can't get over a relatively high bar, what does that tell us? Capital One, what does that tell us? Next week, we're going to have Apple, we're going to have Amazon and Alphabet, a.k.a. Google, some very big tech names. Now, if tech's been the driver,
what do you want to do before that? As an investor, what are you going to do ahead of Apple, Google, and these big tech names?
Again, everything has its time and price. If expectations going into Apple are a little guarded, maybe that tells you that that everyone's leaning the wrong way, and if the bar is lower, if they can give some good color on upcoming products, if they can give good color on margins, maybe that's all the stock needs. Apple's also very well known for sandbagging their guidance, and I think that's built into expectations as well. Google, everyone's excited about the ad platform. Everyone's worried about, but then there's this worry about regulation, the European Commission cracking down on them. Can they give expectations there? As for Amazon, I hear over and over again, this is a $1,000 stock. Everyone loves it. They dominate retail. That's a high bar to get over. Not that valuation matters in that company, but I've heard a lot of bullish arguments there. So that number better be good.
Yeah, is anybody going to look at valuation on Amazon? I mean, that has been the story in retail to buy, right?
Anytime anybody says valuation isn't important, then it will suddenly become important.
When you're down.
That's
regardless of whatever metric you use to value it.
Yeah, and that's what it comes down to. Look, I can make the argument that if you carve out the cloud business, look at the businesses separately, people have said, hey, that business is cheap. I've actually heard that argument. We don't have time to get into it here, but suffice to say, that's the mentality out there, so it tells you about expectations for the stock.
Unbelievable. Jeff Bezos keeps knocking the cover off the ball. Michael, good to see you, my friend. We'll see you back in New York. Michael Block there.